What's up, guys? Welcome back to the weekend edition of Rawstocks. It's Rustic here, and we're going to be taking a look at some of the different time frames on Tesla's chart. We're going to be looking at where price came from, where price ended on Friday, and where price is likely to head into the rest of the week. Before we get going, don't forget to check out the links in the description below to the Rawstocks Discord, where I'm hanging out during market hours. There's a deal going on for premium upgrade right now, 50% off the first month. Premium's normally $25, so it makes it $12.50 for that first month. And there's some discount codes for that right now. Also a link to Top Step. If you're interested in attempting to pass a futures funded trading account, there's a link in the description below as well. Also some other ways you can help support the channel, as well as the Rawstocks merchandise page where you can get Rawstocks hoodies, t-shirts, and other cool stuff. So let's go ahead and jump into the chart. First chart I got up here is the daily chart. A couple things I want to highlight on this. This is going to be a fairly quick episode today. Just want to really get the details of some of the higher time frames out to you guys. But on the daily chart, right, we've been talking about price potentially going higher, although on Friday it did sell down, and we saw some wicks throughout the week that brought us lower. Ultimately, we have not broken a new low. So we are not having a bearish bias quite yet. And as you can see on the daily chart, a couple of things we want to highlight is this swing low and this previous high here, using a standard deviation on our Fibonacci tool. What we're looking to target is between the 1 and the 2 standard deviations. So there's your 1, there's your 2. That brings us somewhere between 217.18 and 238.31. That's our ultimate target on the way up. And if you were to measure from the swing high here to the swing low, in between here is probably going to give us some sign of a premium discount range. So if we look at swing high to swing low, we got our equilibrium right above the 1 standard deviation, right? And then we have our 618 right above the 1.5 standard deviation, and we have our 70.5, which is our optimal fib entry level, or our optimal fib trade level, right at that 2 standard deviation of 238.31. So that's what I'm looking for, in between that 1 and that 2 standard deviation, above equilibrium, back into premium, right, where then we could potentially see price go lower again. Also on the daily chart, we have a daily fair value gap, which is a bullish fair value gap. So we saw that breakout candle last Thursday, and then we've seen price come back down, reprice and balance into the bullish fair value gap. And then what I anticipate that we see next week, even if we do get a wick down Monday or Tuesday, what I anticipate is that we start seeing price push back up to fill this gap, right, and to start heading towards our standard deviation levels that we just talked about. Okay, if we drop down into the 4-hour chart, here's our 4-hour chart. On our 4-hour chart, a couple other things to highlight. If we look at the swing low here to this swing high here, and we see that we've already come back down into optimal trade range. We've talked about that already. You can also see on the 4-hour chart, we have a bearish fair value gap here that we've been talking about. It's also a weekly bearish fair value gap in that same area. And you can see we've priced into it. We have not fully rebalanced that price range. We sold off. If you draw a little trend line here, we can see that we're coming back down to test support on that trend. Okay, and what I'm anticipating, even if we get a manipulation move that kind of looks like the trend's breaking down, what I anticipate is we're going to pop back up, we're going to head to close that fair value gap, then we're going to start to head again to our fib levels, our extension levels here on this optimal trade entry, or this smart money reversal, right, would be our negative 62, which is at 207.91, then again our 1 standard deviation based on that fib level 215. So some similar to our previous high here and low here is going to be right around the same level. 217 was it on the daily chart? It was 217.18, right? Because we were looking at this high to this low using standard deviation. And then if we're looking at this low to this high, right, back into optimal trade. So standard deviation 215.66. That puts us right around that 215, 216, 216 level, right, 217 level. And then our two standard deviations on that fib level is 236.05. So just shy of where we saw the other standard deviation. It's going to put us right into this kind of little minor consolidation range on the 4-hour chart, would be my guess. So if we then drop down into the 1-hour chart, on the 1-hour chart, what I want to highlight is the most recent activity is that we saw a lot of stop raids going on last week, right? So we had a short trading week with no Monday trading. We had this weekly open gap right here. Okay, we've traded back through it with a wick, but you see a lot of activity up here where we continue, we raid the stops here, we come back up, take the liquidity that's in these wicks, we come back up, we raid the stops from the hourly candle on Thursday, and then we again try to come back up into the order block here where there's additional liquidity. Likewise on the downside, we also saw a nice wick come and raid the stops here, right? Another wick here on the 22nd. Opening candle, right? Another stop raid, right? As we rip back up, and then we've come down and we've cleared out the stops completely, cleared out the sell side liquidity that's in these equal lows, relative equal lows. We are inside this order block. So basically what we want to be looking for is, does this order block hold, right? I put Judas swing question mark. Was this the Judas swing, right? We've seen the stops get raided. We've seen this kind of act as a consolidation range over the last week, right? Which is a pretty large range, all the way up, if you count wicks, almost to 200, 199.45. But we're just going to look at this 198, right? All the way down to 191.5. Even though there's lower and higher points, we're saying this range is the consolidation. So is this the Judas swing of manipulation to try to run these last stops out, run the liquidity, come back into the order block? And at that point in time, are we going to start to see price rally up? All right, this is kind of our last line of defense. Even if we drop down a little bit further, then what I want to see is I want to see us start to make moves like this, right? To the upside, eventually running out this 205.42 and then going to those targets we talked about on the higher time frame charts. Now, if that doesn't happen and we start breaking down below this order block becomes a breaker block, and then we might trade back up, find support in there, and then come back down and target the lows back from mid-February, right? And that would take us down into the low 180s. So we'll really be watching this 1-hour order block to see what happens with it, if the order block becomes a breaker block or if the order block holds as support. No clear indication. We'll probably get some kind of answer on Monday. Then the last thing I want to look at is just a 5-minute chart. 5-minute chart on this has some indicators, looks a little bit more messy, but you can also see same thing, right? We got our 1-hour order block right here. We got a fair value gap that we're watching, that we're traded into 1-hour fair value gap, I believe it is, as well. And so we're just we're inside of these areas where there's liquidity, right? So we've come down, we're come back into this order block here. We just talked about that as holding support. If that doesn't hold support, we got the 4-hour inverted fair value gap, but we've already been here. If we come back down to this fair value gap, that's in the 185 down to 182, 82, 182, 50, something like that, and we take out that fair value gap, we're going to start targeting sell side liquidity, which again, sell side liquidity down here at 182, and then we have additional sell side liquidity all the way at 175. So if that order block doesn't hold, don't expect this 4-hour fair value gap to hold, and be looking for price to go all the way down to 175. So hopefully that has been helpful for you guys. Again, don't forget to smash a like, subscribe, share with all your friends, join the Discord community. It's free to join, even if you don't want to upgrade to premium and get the call outs, get the access to the book study, get access to the premium chat and the other stuff we got going on for premium members. It's free to join the community. You can come out, you can hang out with a bunch of awesome traders during the market hours. A lot of good conversation going on, a lot of critical thinking in regards to where price is going. And it's not just about Tesla. There's a lot of traders in there trading SPY, QQQ, NVIDIA, some of the Mag 7 stocks, and even some other ones. So come on, join the community, and I appreciate the support. We'll see you guys on the next one.